Hey, welcome back to the Mining Pod. We had a really bad day in the markets today, so we're just jumping on the horn really quick to do a 10-15 minute overview of Bitcoin mining stocks with Colin Harper, EIC, over at Blockspace with myself. So we'll get into it. No ad read or anything. Let's just jump right into the stories. Colin, how you doing this morning?
Pretty good, man. A bad day following a bad week, presaging potentially a bad year. We'll get into some of the data, though. A lot of, basically everything is bleeding right now, Bitcoin included.
Yep, I just pull up Bitcoin on TradingView here, and you can see the whipsaw this weekend. We dipped below 80K. Bitcoin finally broke. A lot of people were talking about how it was potentially decorrelating from everything else. We had this tweet from Joe Weisenthal noting how Bitcoin and tech stocks were kind of decoupling. That didn't last very long. It barely made it into the weekend before it completely died off. And so we dipped below 80K. We went as low as 74K during Asia hours. And then we kind of rebounded a little bit into like the high 70s. And then as of 1 p.m. ET, we're still kind of range bound. The most interesting thing that just happened the last 2 hours or so was we had the tariff announcements last week. And then there was a fake headline that a lot of people thought was serious that added a lot of momentum back to the stock market. And we actually went green for a little bit. And then the White House corrected it, said it was fake, that tariffs were going to indeed be pressed forward and there was going to be no 90-day pause like the fake headline said. And then we went back down. So you can see that little blip there. You might have been asleep during all that, Colin.
Yeah, I was. But I woke up to more winning. So we're happy to see that.
That's good. I thought this headline was notable just to set the context. So Trump obviously had the Liberation Day thing last week where he announced reciprocal tariffs in all these different countries. A lot of people saying they're not reciprocal tariffs, that they're actually just made up numbers. Who really understands the benchmark for how these things are created?
Well, I actually can give some context on that. What it is they took the trade deficit with each country and divided it by net imports the U.S. Brings in from those countries. So that methodology got criticized by a lot of people, but the argument I've seen is that when they said reciprocal, they didn't mean like one-to-one. It just meant that they're going to try to address the actual deficit between each country. Now, that's not true for everything. There are certain things that are exempt from that methodology, like copper, pharmaceuticals, lumber, and semiconductor chips I think they have like a flat rate. And then there are certain countries like the UK where we just slapped like a 10% tariff and didn't try to actually fully address the balance. So
thanks for the context. Yeah, I saw something about the EU that they're already trying to do a net zero on industrial tariffs with the US. So it does seem like some of these things are turning into conversations about reciprocal 0% tariffs, which would be a long-term benefit for all countries. If you're, I think, a true Bitcoiner would say, if you're more on the libertarian side of Bitcoin, but we'll leave that topic for another day. The bigger headline, of course, out of this was China's not playing ball. Trump announced a 34% tariff increase. China went ahead and said they're going to do their own 34% tariff increase, and they're going to back it up with internal stimulus to help bolster their economy. And then as of about an hour ago, Trump truthed on his Truth Social account that that the US will probably do another tariff increase if China continues to hold up its tariffs. So that's the skinny on tariffs. Let's go over to the digital assets ecosystem. I really like this stuff that CoinShares puts out. Of course, our friend Mac Himmel over at CoinShares. And they're European, so you have this very annoying cookie thing pop up, but that's okay. Minor outflows of US 240 million, despite the recent global growth scare. Every week, CoinShares puts out this little data sheet to show how much has been flowing into digital asset ecosystem. And last week, it honestly wasn't that bad of outflows, negative 240 million, compared to some major inflows over the last calendar year. Year to date, we've had pretty bad outflows. January was pretty good, but February and March was basically all outflows, as you can see here, which is not fantastic. I think this week will be a lot more brutal if we see the tariffs remain, which it does seem like they're going to stay around. Any thoughts?
Yeah, and with regards to how sticky tariffs will be, the Trump administration has basically said that they want to completely correct the trade deficit that the United States runs. It's like in the ballpark of a trillion, 1.2 trillion per year if you annualize it based on current rates monthly. The other thing, though, back to what you were saying about potentially bringing countries to the negotiation table, the Trump administration released something that said about 50 countries are coming and saying that they want to renegotiate their trade deals with the U.S. and find ways to work with them for lowering the tariffs. The question in my mind is, if a country comes back and says, we'll put 0% tariffs on all U.S. goods, will our tariffs still remain in place? Because that doesn't necessarily immediately address the deficit, right? Will the Trump administration wait until the deficit is completely corrected to try to lift some of these things? Or will they decide that once they have more favorable rates on the exporting side for us, will they actually end up reneging on some of these? So that's the thing that I would look out for. And going back to Joe Weisenthal's tweet about Bitcoin temporarily decoupling from the NASDAQ, I was holding my breath on Friday when I saw that, because what you'll see with Bitcoin is it either precedes or lags liquidity events like this. And that's exactly what we're seeing right now. What it means for the rest of the digital asset ecosystem, I think you kind of hit the nail on the head with regards to this could get worse in the weeks to come. The one silver lining here is that the only industry within Bitcoin and crypto that is really directly affected by tariffs is Bitcoin mining. You know, everything else is software and services. You should expect those companies like Coinbase, et cetera, to maybe be a little more resilient here, so long as demand for the assets keeps up. And that's the big question mark as to whether or not Bitcoin is going to act more like a risk off asset like gold that people will flock to as they sell their assets, or if it will just get crushed like something like the NASDAQ, right?
Yeah, I mean, I think it's just going to keep getting crushed for a little bit longer. There were some pre-celebratory tweets kind of going around, and I was starting to wanting to buy into it too, that like Bitcoin would finally decouple from everything else, and people have bought into the digital gold thesis, but I don't think that was going to happen. Probably a little bit too early. You remember from March 2020 when Bitcoin sunk like a rock with all the other tech stocks, but then post, it started being like a rising indicator and started rebounding really well through the summer. And then we had a very hot stock market for, especially for tech stocks through in 2021, mostly because people were stuck at home and people were just like piling money into these tech stocks. And I just don't think Bitcoin has really shaken that yet. Gold has done really well since August of 2025. It broke $3,000 per ounce, and it still is above that, even though it did lose a little bit this morning. Let's go over to Bitcoin mining stocks, taking a look at hash rate index on their mining stock page. And we're just looking at the 1 day change. This is a percentage. And you can see like a few of these are, you know, smaller companies. So I wouldn't say like they're necessarily super notable because not a lot of people have them in their portfolios, but you do get in some things like Hive is interesting that they're up on the day. But you know, most of these were in the red or deeply in the red. I would have expected this off to be worse, but we did have a weird day with that fake headline that kind of altered the course of things. But yeah, as we get deeper into this lineup, I mean, we're seeing some pretty brutal stock picks in here. The lowest negative 35% with Soluna, but
especially if you can you scroll up really quickly? I think it's the third column is year-to-date change.
Yeah.
And if you look at the year-to-date changes, it's just been brutal. I mean, most of these stocks are down 50%, and some of them are down more than that. It's been a very hairy year for news for Bitcoin miners. You have a lot of them trying to pivot towards AI and HPC. And then you had, like we covered a few months ago, or maybe a month or two ago, the DeepSeek news, where this AI model coming out of China was raising questions about the actual cost to produce some of this compute and train these models and use them. And that hit the market pretty hard. The broader market as well. NVIDIA got crushed. I believe it lost like 500 billion over the course of that sell-off. And then with Bitcoin miners in general, you know, we're looking just to pure play Bitcoin mining and not AI and HPC plays. Hash price has been getting compressed. You know, it's what is it at right now? It's got to be at like upper 30s per petahash per day, $40. Yeah. So their margins are just absolutely evaporating in this current environment, and hash rate continues to march upward, difficulties increasing. So it's just been a brutal year. And the tariff news was, I won't say the final nail in the coffin, because you never know, what the mortician has in his basket of goods for the rest of the year. But now, as we'll cover on Wednesday's newsletter and on a pod soon, the tariffs are going to absolutely gobsmack some of these miners. The price for their infrastructure and their Asics is about to go up anywhere from 10 to 30%. And it's going to completely shake up the landscape in the US. I think a few predictions, I would expect to see the US's hash rate growth lag other hotspots. I'd also expect to see mergers and acquisitions to pick up over the coming months. It'd be a lot easier for some of these miners who are trying to kickstart growth or grow aggressively to go out and buy turnkey assets than it would be for them to try to purchase everything that is now significantly more expensive in greenfield or brownfield, a data center.
No, I like those thoughts. I'm going to go back to this image here once I can find it from Hash Rate Index. And this is just showing like an index of Bitcoin mining stocks. And you can see this is the 1 year view. And since basically November, when we peaked, December 5th, actually, it's been down only since then. And that shows you how these mining stocks trade, though. They are beta play on Bitcoin. They're going to kind of go harder and faster in whatever direction Bitcoin is going. Bitcoin's been going down basically since December. So these mining stocks are going even harder and faster. And then, like you said, there's some other corollaries with tech stocks, with AI HPC. There's been sell-offs in those categories quite a bit. So these mining stocks are just doing the same thing. One last thought, since you brought it up, which I thought was interesting, is just to go over to Bitcoin treasuries and just kind of see who has dry powder. Now, of course, this is just looking at Bitcoin treasuries and not fiat treasuries, which a lot of these companies have either large loans out, or they have fiat in the bank, or they have revolving credit lines. They have the ability to tap with their ATMs. A lot of ATMs open at the moment. But I think like this Bitcoin gives you a good feeling for who has dry powder. Marathon has a lot of Bitcoin balance sheet, almost 50,000 Bitcoin. Of course, they just announced that 2 billion ATM, which is massive. It's about 50% of their market cap at the moment, or at least it was 50% of their market cap. I don't know where they're at as of today. Riot has a lot of Bitcoin. CleanSpark has a lot of Bitcoin, 19,000, 11,000 respectively. Hut 8 has a lot of Bitcoin, 10,000. And so you might expect some of these guys to start moving in and picking up infrastructure if we do see some of the market dynamics like getting a little tighter in the US. It's harder to purchase Asics, if it's harder to purchase infrastructure, if these tariffs do sort of drag out. Now, the picture might be completely different in a week, right, Colin? Like the tariffs might be pushed back. There might not be any problems with this, but if we're thinking there is going to be tariffs, especially on steel and electrical items, then having cash to be able to purchase existing infrastructure in the United States is going to be a nice alternative and more interesting compared to where it was a few weeks ago than bringing in new ASICs at a 30, 40% markup. Any final thoughts as we're kind of closing out this quick hit?
Yeah, I think that just to zoom in on something you just said there, uncertainty still looms. The Trump administration has been hot and cold with even its formally introduced tariffs against Canada and Mexico. And we have yet to see what the results of any negotiations will be. So I imagine some of these will be called off. The question are which ones and which industries will they impact the most. But I think needless to say, you can expect some pretty decent volatility in the months to come. And then there's the larger question of, will this actually accomplish some of the secondary policy goals of driving down rates to help refinance some of the US's short-term debt that was taken out for T-bills on higher interest rates over the last few years? And what does this also mean for the Fed's interest rate outlook? Market participants and economists are forecasting, I think, 4 rate cuts now this year, around that. Previously, they were only forecasting 1 or 2. And so if you actually get rates driven down by this, if you get bond yields falling, then that creates an opportunity for the market and the market at large to be flushed with some liquidity. And then you could see something similar to what you saw in the COVID crash, right? Where everything takes a huge haircut and then the money printer kicks on and then things have a V-shaped recovery. So it'll be definitely interesting to watch. There will be no doubt many such updates that we can do in the future on how the shifting tariff policies or the fallouts are affecting all of these assets.
Colin, this is like our closest thing to being like a NPR Money Planet show. So nice work. Way to jump on with me early in the morning, PST hours. We will jump off, let Colin enjoy more of his coffee. Thanks for tuning into the show. Worst time zone ever. Eastern's pretty bad too, because I wake up with a panic trying to write something before the market officially opens. If you enjoyed this, check out the Mining Pod on YouTube, Spotify, and elsewhere. And then also go to our newsletter.blockspacemedia.com, and enjoy our writing, Colin's and Charlie's and mine's 4 times per week. Okay, see you guys later.
Deuces, y'all.